community is definitely a huge thing. There are so many things to learn to be the best investor that you can be, that the power of community can't be overstated. The mistakes that you don't have to make on your own, the research that you don't have the time and or ability to do, you can do through the power of community.
Welcome to the Threefold Real Estate Investing Podcast. This is the podcast where you'll not only learn how you can achieve massive success in multifamily real estate investing, but also how you can simultaneously pursue great relationships with your family and a better walk with God. You can achieve financial freedom through real estate investing without sacrificing the relationships that mean the most to you. Now, here's your host, Lee Yoder.
Welcome back, Threefold listeners. Hope you're having a great week. We've got another great guest for you this week. This week, Ryan Stieg is coming to us from Billings, Montana. A little bit about him, and then we'll bring him in. With entrepreneurship and some real estate and his family background and a natural interest in personal finance and investing, Ryan started to take steps in that direction after picking up a famous purple book called Rich Dad, Poor Dad as a sophomore in college. From there, his path has stopped, and taken turns in many different directions to get where he is today. With a focus on real estate as a side hustle since 2016, last year, Ryan stepped out of his W-2 to pursue entrepreneurship with a franchise opportunity, bringing along his streams of passive income to help facilitate that leap to further his interest in investing in entrepreneurship, in addition to helping others to learn about this and do the same. He has fueled that fire as a co-founder at Left Field Investors, which I'm a part of. We'll get more into that, where they focus on education and community for passive investors. It's a great community, but we'll get more into that. Ryan, thanks so much for joining us today, man.
Yeah, you bet. Thanks for having me, Lee. I appreciate it.
Yeah. So we'll get into kind of all that, Ryan, but can you take us back to, I guess 2016 is when it really kind of got started, right? So you'd already read Rich Dad, Poor Dad, but tell me a little bit about the start of investing. So, you got a full-time W-2, right? But you kind of get into it on the side. Can you tell us about like what you'd already read Rich Dad, Poor Dad, but maybe what helped you make the leap, and then how did you get started?
Yeah, great question. So I'd always had an interest, but life goes fast, and so I didn't really get proactive in it until 2016. And kind of a couple of the reasons I got into it is when my wife and I moved out of Phoenix, we kept our house as a rental, kind of accidental landlords. So I got comfortable with having a property manager and remote property management. I wasn't there. I couldn't manage it. So I got comfortable with that, where most people have their comfort investing in their own backyard. But I had naturally had the comfort of having a property off in the distance. And so kind of through the way a lot of people get in is podcast university. You kind of hear it called, listening to podcasts and just opening your mind to different ideas and educating yourself through that. When I started thinking about getting into investing, I had heard about turnkey properties. So took some savings aside, put a down payment on a property in the middle of 2016, and kind of just that was the goal, is to just start accumulating properties as the cash flow and as our savings built up. But I got to about seven properties, 10 doors, and it just seemed like something, if I wanted to scale it to the point where it could replace or come close to replacing my W-2, it was going to be replacing one full-time job with another. And so
Ryan, explain, if you don't mind, real quick, explain turnkey to us. What do you mean by that? Yeah.
So turnkey is basically where it can be in your own backyard or it can be anywhere in the United States, but it's basically where an operator comes in, finds a property, rehabs it to a rent-ready property, and then they make it market available for a retail investor like myself. So they'll rehab it, they'll put a tenant in it, and then I purchase it basically off the shelf as a ready-to-go property. So turnkey basically meaning when I buy it as an investor, it's ready to go.
Yeah, and that company usually manages it for you as well, right?
Yeah, there's a couple different ways that they do it all themselves, or they'll hand it off to a trusted property manager that they work with. So a couple different ways, and we've done it both ways.
And ideally, Ryan, a lot less time involved because somebody else is finding the property, somebody else is rehabbing the property, somebody else is putting the tenant in the property. Then you've got to pay them for that. So if they're all in for, I don't know, 70 grand, you're going to pay them 80 grand, 90 grand, 100 grand, whatever. So they make some money off that. But you have no time into it. And then you have very little risk just because, the property's already kind of been brought to a good standard. So a lot of the stuff's been done. Hopefully they've replaced the mechanicals and, HVAC, stuff like that. So maybe lower risk and maybe lower reward, but kind of just nice and steady, right?
Yeah. Well, the steady part is where I decided to turn into syndications.
Okay.
I had some great properties, and I had some properties that you might hear another term from left field investors called lumpy returns. I mean, I had one property that had too many people in it. They were putting stuff down the drain. It was causing backups. It was causing flooding. It was causing a whole bunch of issues. So that was my one experience, and I still have all those properties today. But that was my one experience going. I'm spending a lot of time working with the property manager, finding new tenants, getting the property. So even though I'm not physically doing the labor, there's still work involved to making sure that we're staying on top of it. So,
and that's really not the idea of turnkey. That you weren't planning on doing all that, right?
Yeah, exactly. And to not to say bad about turnkey, because I've had great experiences with turnkey, but at scale, certainly you're going to have the good, bad, and the ugly with it.
Yep. So started getting a little bit disenchanted with it, or at least thinking, okay, I've got 7 or 8 properties. I don't want to do another 7 or 8. I might want to pivot and go a little bit different direction, right? So what was your thinking there?
Well, more so than really not being being disenchanted with it, I had heard the idea of real estate syndications, and we can go into depth on what real estate syndications are, but basically, it is outsourcing all of the management. So in a syndication, and there's many different forms. I am just a retail investor. I'm not even managing a property manager. I'm outsourcing the expertise to that operator. And so it adds one more layer of passive to the idea of a passive investor. And so when I found that, that's what turned me on to starting more focused on a syndication path as opposed to turnkey properties.
And so Ryan, I guess kind of the difference would be, and we can kind of build out some of these terms, but when you buy a turnkey property, you are the one really buying it. So you're the owner, you're kind of the sponsor, you're kind of the asset manager while somebody else is managing the property. It's yours. And so, like you said, when things aren't going well, it's kind of up to you to jump in. There's nobody else there. You've got your property manager that should be doing it. But if things aren't really going well, you're kind of the guy managing the manager because it's your property. You're the sponsor. Whereas what you're talking about with real estate syndications, that's what we do here at Threefold. There's a lot of others that do that, but that's my job. I mean, I not only find the property just like the turnkey provider does, but I'm the one that's going to manage the manager. I'm the asset manager. So if you invest with me or somebody like me, like you said perfectly, like that's one extra layer. You are not managing the manager. You are not the asset manager. You are simply a passive investor. So really there's a big extra layer that's going to keep you from having to get involved and become active when you really just want to be a passive investor.
Exactly. And so knowing my background, I know that I'm not the best manager of a property manager, even at that scale. So I know that there are others who are way better at that. So the difference in risk return and risk reward was if I find the expert who can manage the property manager, that's well worth the adjusted return of owning it myself and managing the property manager.
Well, and part of that, Ryan, of you not being as good at it is you're doing something else full time, whereas these guys and girls likely are doing asset management and managing the manager full time, right? So that's a big part.
Yes.
Yeah. Okay.
Yes,
what were you doing full time, Ryan? I don't know if you said.
I was in a family insurance agency. So I was second generation in an insurance agency that my dad had started.
Okay. So how did it go? How did it go getting into syndication? What was your experience like?
So far, so good. Not that everything's perfect. You learn lessons. There are investing mistakes and mishaps that I wouldn't do again, but I'm learning from them. And that's part of growing anyway, whether it's investing or anything else. You're learning along the way. But overall, other than a few mistakes that I would have corrected looking back in the rearview mirror, it's been very good. And in fact, just this morning I had one of my very first ones that just sold, and so it's proof yet that the concept works. And so it's been a very good experience. And for me, this is my path going forward. I won't continue to buy turnkey properties just for me personally.
Yep. Nice. You mind sharing maybe one or two of those mistakes, Ryan, that you made early on? that our listeners can learn
Yeah.
from?
Yeah, absolutely. One of the things that I think, in a broad sense, is one of the things that I think is most important for me now is the operator.
Okay.
The operator is someone that you're trusting to execute on a business plan that they've brought to the table. So,
Yep.
Yes, the market is very important, and yes, the actual deal is very important. But at the end of the day, there's people that have to make that business plan work. And so, where I have made the mistake that I would correct is not looking into the operator and their level of expertise, their track record,
Yep.
honesty, and morality. So those were some of the things in very few instances that I would do again. But the operator is really the most important thing, I feel.
Yeah. Yeah. Bet on the jockey, not the horse. Right. I mean, yeah, I agree
Exactly.
with you. It's so much. So do you have like a list of important things that you're looking at when you're, kind of doing your own underwriting of a new deal or opportunity? Or there tools or resources that help you do that? What are some things you're using now that you've done it a few times, to kind of evaluate a deal before you decide to send somebody your money?
Yeah. Well, one of the things that I didn't have in place when I very first started was a community or a network of people that I was maybe not investing with, but investing alongside, if that makes sense. And so community is one of the most important things. I know we'll talk a little bit about left field investors, but community is one of the most important things.
For sure.
Anytime you can talk about something with friends, family, networks, whatever that is, you feel more comfort than just going on that road by yourself. So that's one of the most important things. And then just learning, what is important to me. Currently right now, debt structure is important, and it's something that I didn't look into far enough in the past. And debt structure is going to be really important going forward. And just the tools and questions that I'm able to ask now are just better, having come along the way that with the experience that I have, and learning from other people and their mistakes too. As a community, we'd rather not make the same mistake across a bunch of people. If we can all learn from each other, we'll lessen our mistakes going forward.
Yeah, no, absolutely. No, network is so big. Debt, I mean, it's getting, very important, but I mean, it's important. It was important a year ago. We kind of didn't know it.
Yeah.
But the debt you got a year or 2 years ago was very important. You're finding that out today. And it's just a lesson to learn that it's always important, because you never know what's going to happen. So, you gotta make sure you've got good debt. But let's hit on the networking piece, and let's talk about left field investors a little bit, Ryan. So, networking is so important in so many things. It's like, especially as you're getting into it, maybe you're a little bit newer to passive investing and you're thinking, how the heck do I know who I can trust? Yeah, I can go figure out somebody's track record, but you got to find out my track record. I'm going to give you the highlights. I mean, I'll be honest with you, but I'm going to, put my best foot forward. You'd be better off talking to somebody that maybe has invested with me or has invested with somebody like me, or, something. So the network is so important. I totally agree with you. Tell us a little bit about left field investors, what you guys are trying to do there, how that can help people get started in passive investing.
Yeah, appreciate the opportunity on that. Left field investors was started in late 20 as a company, but it grew from a group of 5 of us that in one way, shape, or form were looking to network with other investors who were investing in the same things we were. If you walk out your front door, there's people talk about 401ks and stocks and bonds, but the next level is real estate. And then even further down the road, it's syndications. It's just not on people's active radar. And so when the 5 of us started left field investors, it was born out of, hey, we just want to network with other people who are investing in the same things we are, educate ourselves together, network together, and learn together better. So that was the genesis of left field investors. That's kind of guided us all along the way. We're just trying to provide content and education and the ability to network with other investors and bring value add to an investor, whether they're just learning about real estate as an investment asset class, or whether they've been in syndications for years. We hope to provide value all along the way, and we're all learning together. I learn every day.
It was 5 guys that said, hey, we want to invest passively. We're not so sure. We're kind of already doing it. We're not sure we're doing it right. Let's put our heads together. And then, over the past couple of years, an extra 1,200 people have said, yeah, that's what I like. I want that. I'm trying to invest passively, and I want to talk to you guys, and I want to talk to these guys and girls, and I want to talk to these girls over here. And so it just keeps growing because more and more people have said, yeah, that's what I want. I want those. And now what's so cool is, there's a website, and we'll put it in the show notes. Obviously, Ryan, is it leftfieldinvestors.com?
Yep.
Right. Just spelled out. And if you're watching YouTube, you can see it right behind Ryan, but just spelled out leftfieldinvestors.com. You go there. There's a lot of resources, a lot you can learn from, but you guys, if you join the community, you guys are constantly, I mean, there's webinars, there's Zoom meetings all throughout the week, every week. You can meet people through intros, which is great. You guys will bring true, like, sponsors on and have them present deals, and everybody can listen to it together, discuss it together, decide if they want to invest together, interrogate the person. And then, probably other people in the community have already invested with this person. So now you've got people, real life referrals that you can trust because they're in the community, things like that. And then a lot of times that sponsor will offer, I mean, most bigger sponsors do this, where they say, hey, if somebody wants to invest $500,000 or $250,000, they get a better preferred return. They get more equity, right? There's better terms for people to invest more, and left field will gather people together and invest together and get those preferred terms. So it's just so cool on so many levels. You can decide together which deals are the best to get in. And then if you do it together, you get better terms, you get better returns, right?
Yeah. We know that everybody comes to, however you find left field investors, you've come from a different path than I have, than you have, than the person next to you has. And so we all feel every member can bring a ton of value that none of the rest of us know or understand, as well as learning themselves too. So we really try to kind of compound the skills and expertise that everybody has to just kind of make a crowdsourced community of better investors.
Right. I mean, somebody joins for the first time, Ryan, and they've invested with a sponsor and you guys haven't. They're going to have better information than the founders or anybody else, right? Because that person come in and say, maybe I'm the only one in this group of 1,200 that's actually invested with the sponsor. I can tell you guys what it's like. You're right. I mean, there's so much value there. It's value for everybody. Yeah. That's awesome. Ryan, tell us a little bit about the transition. So how did your real estate side hustle help you get to the point where you and your wife decided you could leave your W-2, and maybe what was her situation real quick? And then I know you guys kind of jumped into a pretty exciting, crazy venture together. So kind of just tell us, I don't know what your portfolio looked like and what allowed you to make this jump, and what all that looked like.
Yeah. So I was part of a family insurance agency, transportation agency. We had a focus, and me and my brothers and some other partners that we had in the business, we sold that business. And then in 2021, that business that we had sold sold again. And so I was fortunate to have some investment capital, but along the way, I had been investing in real estate, and so those rentals that we had invested with had provided us some cash flow. The syndications that we had invested in provided us some cash flow, and so that is kind of in a grand scale. That's what anybody who's in real estate investing is trying to do, is to supplement or to build cash flow that gives you safety and security. And so in 2020, kind of like what everybody did in 2020, you kind of take a look back at where we're going, where we're headed. And so through Podcast University, I found a franchise consultant, and we had conversations over a number of weeks. Her name's Kim Bailey. And we just looked at, what am I looking at? What do I want to do? And so we landed on a franchise opportunity with Club Pilates, and it was between the passive investing income that we had built and me being ready for, you mentioned my background and my father's background in entrepreneurship. I was just ready to do something different. And so I've always had a passion for real estate investing, but alongside that with entrepreneurship, this just seemed like an opportunity that we were ready to jump at as a family. And so fortunately, my wife and kids were all on the same page, and so it was. We just celebrated the 1-year grand opening last weekend, so it's been a wild ride, but it's been a year so far. So. Oh,
that's awesome! Hey, the first year. I mean, how many businesses fail in the first year, right? So you guys are past that hardest first year.
Yeah, the trials and tribulations of the first year of business. We learned that there's stress and there's great days, but it's been a very good first year. So.
Good. I want to get more into that, Brian, but I just want to hit on something you said. You were fortunate to sell a business, gave you some investment capital, and so some people might think like that's what allowed you to do it. But correct me if I'm wrong, but when you talk about cash flow and that's where it's at, I just agree with you so much, because even if somebody were to sell or were to inherit something, or you sell some stock or whatever, and you've got $500,000, well, if you decide you need $100,000 a year to live on, $500,000 is great because, I mean, essentially you can live off of that for 5 years, but that's it. Like after 5 years, it's over. It's done. Versus if you can build up, and yes, this would be a really high place to get, but if you had $100,000 in cash flow coming in from passive investments, you can essentially live forever off of that. I mean, essentially, theoretically, right? So it's just a very different place. I mean, in fact, I'd feel a lot better if I had $40,000, $50,000 a year coming in cash flow versus just having a big lump sum in the bank, because that lump sum is just going to keep going down. The cash flow is going to keep coming in. It just recycles. It just keeps coming. And so that's where you did get the lump sum, but it was part of that cash flow. And then probably feeling like you knew how to grow that some more and keep that going. That gives you a lot of comfort that you have some freedom to go do some things, because you know the cash flow is coming in, not just I have this chunk that's going to go down over time and hopefully it lasts a long time. It's like, no, there's going to be money that keeps coming in, right?
Yeah, exactly. I'm really glad that you brought that point up, because that is one thing. My wife isn't a finance person, and so fortunately, I'm blessed with a wife who trusts me with kind of the crazy ideas that I have sometimes.
Yeah.
But we had that discussion just the other day, and kind of in the simplest way I can put that, like you said, whether it's $100 or $1,000 or $10 or $100,000 or $1 million or whatever it is. I've always the kind of the way I phrased it to her is, yes, we have X amount of dollars. If we have X amount of dollars in the bank, you can live off it for X amount of time. You have that capital that you can spend for living expenses, and then it's gone.
Yeah.
But what I try to do is in the simplest terms, I try to turn that money into some percentage of it being regular and repetitive income and or growth. And so whatever that dollar figure is in the bank for anybody, your goal to create passive income is to turn that into regular and or repetitive income that also has an upside too. And so, and that's difficult for some people to realize, is seeing money that you can spend as a living expense versus turning that money into cash flow. And once you can flip that switch, it takes patience. It's not a quick and easy, it's not a quick and easy switch to flip. But if you can turn that into it, then yes, you're right. You don't have that cash that's being spent down to zero. You have cash that's working for you and providing income along the way.
Yeah, it's a great point. It's so powerful. It's an important concept to learn. Well, Ryan, tell us a little bit more about Club Pilates, and just what were those conversations like with your wife? I mean, what did it look like for you guys to kind of make that jump? I mean, yes, you're in a pretty good financial position, but it's still, taking a risk and making a career change and making a jump. What was that like for you and your wife? I mean, is she less of a risk taker and you were ready to jump in and maybe she wasn't? I mean, yeah, just tell us a bit about that.
Yeah, she is less of a risk taker, and probably the sanity to my insanity sometimes with some of the ideas. But she again, I'm very fortunate that she supports me in these ideas and these endeavors. And so we had conversations, and when I was speaking with Kim and we were going through some of the franchise opportunities, Club Pilates is the business model that found us for what we were looking for as a family, and me as an investor and a business operator. But we were looking at a whole bunch of different opportunities. And so we had a bit of a runway to talk about, what is it that we're looking for? What is it that this business provides versus this business? And so it was a lot more work than probably what I had anticipated. So I made that jump probably sooner than I would have expected, but to do it right, I felt like I had to really put my time and effort into it and not try to juggle too many things at once. So
first question, are you a Pilates expert? Are you really good at Pilates?
I had never done Pilates before we opened it.
I wonder. So, I mean, you're looking at more as an investor. I can tell that. What was it about it, Ryan? You said kind of Club Pilates found you, and there were just some things about that model or whatever. Do you mind giving us just a couple of things of like what you liked about Club Pilates specifically as a business model, not so much that you love Pilates?
Well, I am now a believer in the art, in the exercise of the Pilates. Yes, I will say that.
Yeah, if you can't drink your own Kool-Aid, how can you sell it?
That's right. That's right. Probably the best way on a podcast like this that I can put it is that kind of what we were talking about earlier in the conversation: operator, market, deal. And so as you're going through this, I need to make sure that the franchise itself is a strong franchise with a track record, that they have the leadership, that they have resources, and that they have the education and business model that me, with my skill sets, I can use all those resources and maximize them to the potential that the business works out. So that was first and foremost, is finding a franchise that has the opportunity, track record, and resources to support me as a franchisee. Second was the market. And so we felt like there was a market here in our hometown for the business of Club Pilates. And then that was Club Pilates ended up being kind of the winner at the end of the day. So it kind of worked similar to my real estate investments is operator market deal.
Yeah. Cool. No, that makes a lot of sense. Well, good stuff, Ryan. I want to kind of wrap up with this. I always like to ask this question. What do you think is the key ingredient to being a successful, real estate investor, but just, I guess, maybe just thinking of left field investors and what you do and what you've done a lot of. Let's focus there. What do you think is the key ingredient to being a successful passive investor in syndications?
Well, I'll give a little bit of a biased answer on that. I really think that, having had now starting on my own, finding a small group, and now being part of a larger community, community is definitely a huge thing. There are so many things to learn to be the best investor that you can be, that the power of community can't be overstated. The mistakes that you don't have to make on your own, the research that you don't have the time and or ability to do, you can do through the power of community. So community definitely is one of those things, but also being humble enough to know that you don't know everything, and to know that other people, even if it's small or even if it's huge, other people can bring a ton of value through their experiences. So having the humility to always want to learn, to add value to any relationship that you come across, and then to learn and grow and add value wherever you can.
Yeah. Couldn't agree more. And let me turn that question a little bit. So what would you say is a key ingredient to, while you're having success in real estate investing and investing passively in syndications, what's the key ingredient for maintaining your priorities with having success as a husband, as a dad? I know you're a man of faith, so your walk with Christ. How do you maintain that and make sure you're having success outside of your investing? And I mean, for you, you're an entrepreneur, so you're all in on the business. I know, as an entrepreneur myself, I mean, you can get absorbed up in that. It can take over, right? You can kind of become obsessed with it. So maybe what are some things that you're doing, Ryan, you and your wife?
Yeah, well, certainly through phases, staying grounded, staying humble, making sure that we're doing things right. But then through our family, I think one of the most important things is really to make sure, as an entrepreneur, as an investor, and then as a husband, as a father, to make sure that, work-life balance is kind of a cliche term, but just to make sure that no one area of your life is taking too much from the other. And so making sure that we're given the right amount of time and effort to our businesses, to our investments, to each other, to the family, that's a daily balancing act. And so really making sure that we're staying grounded in what's most important. Yes, the investing in the business fuels income for the family, but making sure that faith and family stays at the center of it. And then for me personally, as an investor, I really have to tame down my interest in shiny object syndrome. I mean, especially being part of left field investors, there's so many things that now I have my eyes open to that I didn't know before. And so kind of staying grounded in making sure that I stick to, as close as I can, my investment principles of building cash flow and building long-term growth, and not chasing the next thing that's out there and looks like a great deal. So I hope I answered your question, but kind of from each aspect, that's what we're trying to keep grounded and stay focused.
Yeah, I would imagine with you and your wife, Ryan. I mean, my wife Hannah and I, we work together in our business in Threefold. I'm like, imagine like us, you guys probably maybe get to be around each other more than a lot of other couples, but you're working during a lot of that time. So it's like, there's extra time, maybe even with your kids too. Yeah, we have extra time together, but it's like we're working. So it's not always like real quality time. So you guys kind of battled through that a little bit?
Yeah, that's a really great point too. In fact, my wife, she transitioned her career from working in a school. She's a speech therapist, working in a school, to working remote. So we work about 6 feet apart from each other. We don't work in the same business, but we work about 6 feet apart from each other in different rooms. We're very blessed now to be able to spend more time with the kids. We're here in the mornings, we're here in the afternoons when they go to school, when they get home from school. We get more interaction during the day too. But you're right, we're both busy. It's not like we're working right next to each other and we can hang out all day. We're both full time in what we're doing, and so we do get more quality interactions just throughout the course of our day and with the kids and stuff too. But yeah, we're still pedal to the metal, working during the day.
Working hard, but you got some flexibility. You guys can kind of decide a little bit. Yeah, it's awesome. Good stuff. Well, Ryan, I always like to ask for a good book recommendation. Anything you've read recently, or anyone you like to recommend to people, maybe specifically people that are interested in doing what you've done, investing passively in syndications, or, I mean, even if it's not that, what would be a good book recommendation?
Yeah, I'll cheat a little bit here. I'll give two. One, definitely, Rich Dad Poor Dad just it opens your mind to a different way of investing than the world or the traditional education teaches you. So that would be a first book, just to open your mind to what you and I are talking about today. The second one, really for me to understand, be a better investor. Brian Burke's Hands Off Investor is just a quality book. It's kind of like one of the keystones for this model of investing. You just learn so much, and he does it in a great way to really be able to be educated at a deeper level about investing.
Yep. I'm reading that right now, getting close to finishing. I just had him on the podcast, and he's awesome.
You're right.
Yeah. Great book. So thanks for that one, Ryan. Well, good stuff, man. Hey, before I let you go, I always like to ask my guests how my listeners and I might be praying for you over the coming weeks.
I think that one of the things that we have is we are just working to, I'll step specifically to left field investors. I mean, we had a meetup, and we're kind of learning along the way as we go, and we're building this thing. So we're really trying to be intentional with how we build 2023 and what we can do to continue to add value to the community that we've built so far. So that's kind of at the forefront of my mind right now from a business standpoint is just continuing to build left field investors, and to, again, like you said, making sure that I'm staying grounded with faith and family and being a business operator at the same time.
Absolutely. Yeah, I would love to pray for that. Yeah, I love what you guys are doing at Left Field Investors. You got a chance to help so many people, and I can just tell, having been around you guys at the conference and stuff, and what I've seen out of Left Field Investors for the year that I've been in. I mean, just a servant's heart. You guys are really trying to serve people and bring people along to help them invest passively, like you guys have done. And I'd be very happy to pray for you. I'm always praying that prayer for myself, that I can stay humble, stay grounded, maintain my priorities, make sure, faith and family are at the forefront, and then work on the business with the hours that are left over, not vice versa. Right. So I'd be happy to pray for that with you, Ryan. So, man, thanks for coming on. This has been so helpful. You've got a path and a story that other people can follow. And if they want to do that, probably jumping on and joining Left Field Investors would be a great way to do that. So thanks so much for coming on and sharing your story today, Ryan.
I appreciate it, Lee.
All right.
Very good
take
time
care, man.
Thank you for joining us for another great episode. I hope you'll take action on what you've learned today. If you enjoyed today's show, please consider leaving Lee a 5-star rating and review. And check him out on threefoldrei.com. Until next time, 1 Timothy 6:17.